Have you lost money trying to catch breakouts, and do you want to be profitable instead with a brand new strategy? In today's video, I will be providing you guys with a solution for this problem. First off, we have to start with understanding why you should never try to catch a breakout trade. Why is it? Over here on the chart, I have a little example for you guys. And what you have to understand is that whenever you are trying to catch a breakout, for example, over here on Bitcoin, where we have this range over here and the price made this push outside of the range and people are over here trying to catch a breakout trade, that means that they are breakout shorting Bitcoin over here. Now, why should you never try to short a breakout or long a breakout if you break out at the top of the range? It is because at the bottom of the range and at the top of the range is where we have untapped liquidity pools. Now, inside of those liquidity pools have been engineered by smart money in order for smart money to fill their own bigger orders. What do I mean by that? I mean that those liquidity pools consist out of unfilled orders and out of stop losses. Now, if smart money pushes price towards that liquidity pool at the bottom of the range, for example, they can use that liquidity in order to fill their own bigger orders. Those orders are so big that they need huge amount of people to sell to them in order to fill their own buy and long orders. It takes time for those orders to fill. And if they want to fill millions and millions of buy orders, that means that millions and millions of people have to sell to them at the same time in order to fill those buy orders. And that is why they engineer these liquidity pools at the bottom and at the top of ranges, or at the bottom of important lows or at the top of important highs. And they engineer those liquidity pools. They push the price towards those liquidity pools. That's where they fill their orders. And at the same time, where they are filling their buy orders, you are opening up short and sell positions. And where they are filling their sell orders, you are opening up buy and long positions. And that is exactly what they want, because by opening up those breakouts and breakdown positions, you are adding to the sell or buy pressure. And what do they do with that sell and buy pressure? They absorb that sell pressure at the bottom of ranges or absorb that buy pressure at the top of ranges in order to fill their own buy and sell orders, right? Because if you are longing and they are shorting, they can use those long orders in order to fill their own sell orders. When you are shorting where they are looking to build their longs, they are using that short and sell pressure in order to fill their own buy and long orders. Do you understand? And that is the first reason why you should never look to break out long or break down short an altcoin or Bitcoin. So now I've been teaching you guys why you shouldn't become part of the retail liquidity. But you are now probably wondering, okay, Guru, so I should not break out long or break down short a range breakout or breakdown, but what should I do instead? Instead of breakout longing or breakdown shorting, you have to be trading deviations instead. And deviations is whenever the price, for example, over here on the Bitcoin chart, is breaking down out of a range, and instead of breakdown shorting the Bitcoin price over here with your stop above this high, or this high, you wait for a reclaim inside of the range, back inside of the range, in confluence with a shifted structure, and that's where you start looking for long positions target higher levels. So in this case, for example, if we zoom into the lower price section over here, lower time frame price section, we can see that we are retesting this range low. Now, this is where the money, the retail money, is opening up short positions, I should say. They're either opening up breakdown short positions over here, or they wait for the perfect retest after the breakout, and that's where they open up shorts. But instead, we are patiently going to wait for a reclaim back inside of the range, and this is our trigger to start looking for longs. Whenever you break back inside of the range, for example, over here, that's also where we shift structure to the upside, right? If you get a deviation in confluence with a shift in structure back to the upside, that's where you start looking for longs. Now, eventually, after this deviation, that means that everyone that was opening up breakdown short positions over here, once again became part of retail liquidity by opening up breakdown short positions with their stops above this high, this high, this high, this high, or maybe even above this high if they are looking for swing short. And eventually we can see that if we play this chart, that everyone that was looking to break down short got wrecked very, very hard, and all of their stops got targeted. Instead, if we anticipated a deviation over here beneath the range low and we zoom into the lower time frame price section, what we can see over here, if we go to the lower time frame price section, is that over here we can see a confirmed shift in structure, because this candle over here opened and closed above this high that brought us to the significant low. Okay, so we shift structure, and then we determine a POI high, for example, beneath this sell side liquidity, where we want to start building a swing long. Because instead of waiting for a deviation and a reclaim, you can also anticipate a deviation. Because we are anticipating retail to open up breakdown shorts and smart money to absorb that sell pressure, we start building a long position that is anticipating this deviation beneath this range breakdown and anticipate a reclaim and then a pump towards the range high. Very easy range trade, and obviously you always want to anticipate a potential breakout as well. Now let's see if we anticipate a breakout like this. Look how massively we are profiting during this setup over here, and it is all because of the fact that instead of breakdown shorting, we know how to determine the liquidity pool. We know where retail is looking to break down short Bitcoin, and instead of breakdown shorting, we anticipate a potential deviation and start looking for longs. We always want to trade against retail because smart money is using those retail in order to fill their orders, and we want to become part of smart money because we want to become part of the profitable traders and not of the unprofitable traders. Once again, over here we have a beautiful range for Bitcoin with our range high pivot over here and our two range low pivots over here and over here. 3 pivots, and that makes up for a beautiful range. Now we can see that we have an untapped liquidity pool above the range high because we haven't swept the range high, and we have an untapped liquidity pool below the range low. Now retail is probably waiting for a breakdown below the range low to short it back down, or a breakout above the range high to long it up. Now we know that instead of breakdown shorting or breakout longing, we want to anticipate a deviation below the range low or anticipate a deviation above the range high. And if we play this chart over here, we once again see two beautiful examples, because over here is where we get a fake breakdown on the lower time frames. We can see that we confirm the deviation in a beautiful way, right? Because once again, low time frame sweep, we shift structure to the upside, okay? And this is where we can anticipate a deviation because we shift structure back to the upside and we start looking for longs on the pullback, once again beneath the low where we have sell side liquidity. That's where we are looking to accumulate our long on Bitcoin. That's where we get filled in validation below the low of the deviation, and eventually this is where we fill our orders. Instead of breakdown shorting, we anticipate a deviation beneath the range low, and our target obviously is the untapped liquidity pool above the range high. And if we play this trade, we can see that once again, guys, it was the right decision to, instead of breakdown short the range low, which is what retail was probably doing, we anticipate a deviation, and instead of breakdown shorting, we start looking for longs, and eventually it pays off big time if you took this deviation trade. Now we are once again at the range high, and once again, what is happening around the range high is that people are constantly breakout longing Bitcoin, and this is beautiful behavior, guys, because what is happening is that we are constantly pushing above that range high. Retail focus into buy positions with their stop over here, or maybe even their stop over here, anticipating higher prices. Once again, over here, breakout long positions opened, breakout long positions opened, breakout long positions open inside of a range high liquidity pool. What is smart money doing, we think? Instead of opening up breakout longs, smart money is absorbing that buy pressure in order to fill their own short orders, targeting sell side liquidity. Okay, so we want to follow the smart money instead of the retail. And let's see what happens after absorbing that long and buy pressure. Many times they filled their short and sell orders, and eventually we can see that after filling those short and sell orders, Bitcoin was once again finding its way to the downside. Once again, a beautiful example why you shouldn't break out long, but instead anticipate a potential deviation above the range high, accumulate short positions, and target the liquidity around the range low. Over here, guys, we probably see the most beautiful example out there, which was the reaccumulation range after the bear market. A breakdown outside of the range low, where we have 3 pivots, pivot 1 for the range high, pivot 1 for the range low, pivot 2 for the range low. We break down below the range low into that liquidity pool that was existing beneath the range low. This is where people start breakdown shorting Bitcoin to target 12k with their stop above this high, or this high, correct? Now let's see, if we play the chart a little more, we can see that we get a perfect retest of the range low, right? This means that also the people that were looking to short the range low with their stop above this high, or this high, and the target, for example, being 10 or 12k, also got into a position. Then they see this rejection after the tap of the range low, which means that after this rejection, even more people FOMO into breakout short positions over here with their stop above this high. Now, what do we think that smart money is doing? Smart money is absorbing absorbing the sell pressure and was using the liquidity pool that we generated over here beneath the range low in order to fill their own buy and long orders. If we go to the lower time frames on the 4-hourly time frame over here, we can also see that we saw once again a beautiful sweep of the low. After that beautiful sweep, we shift structure to the upside, and that means that we can start looking for longs where there is sell side liquidity resting. After a break of structure, anticipate a deviation below the range low. This is where we accumulate longs with our stop beneath the low, and we target a swing long trade over here for the Bitcoin price. Now, if you would have taken this setup, obviously guys, I understand. In hindsight, everything is so easy, right? It's so easy for me to tell you guys this right now, and this would have been a crazy setup because Bitcoin is currently trading around $50,000. But trust me, there's a reason why this price action was occurring on the charts. There's a reason why the breakdown shorts and sell positions got punished. And there's a reason why smart money was accumulating their positions right here. It's right here on the charts. And this would have been a beautiful opportunity if instead of breakdown shorting over here, right, you start looking for a long, anticipating a potential deviation. And eventually, like I said, in hindsight, it's also easy. But look at the pump that we saw afterwards, right? Pumped like crazy. We could have made huge profits. And this is one of the reasons why I personally started looking for longs and spot positions over here. Those that have been following me for a long period of time know that I've been accumulating my spot around that area, know that I've been looking for longs around that area and also took some longs. Obviously, I'm not holding those long positions anymore, but instead of breakdown shorting, I was anticipating a deviation to occur right there. And eventually right here on the charts, if we would have played this entire swing trade setup over here, it would have been a beautiful trade. Like I said, it's easy to say that in hindsight, to take a almost 30 RR trade. But looking back in hindsight, we can see that once again, it was the right play to anticipate a deviation instead of a breakdown. And this is the main reason why instead of breakout trading Bitcoin or altcoins, you always have to wait for deviations of important range levels instead. I hope you guys enjoyed today's video. I hope you guys actually learned something during today's video, and I hope this video will prevent you guys from breakout trading Bitcoin or altcoins in the future. Thank you guys for watching. Smash up that like button. If you guys do have any questions, feel free to let me know in the comments down below. Subscribe to our YouTube channel, and I'll catch you guys on Monday's video. Ciao, ciao.